Mo, market volatility continues to generate headlines, although it's not really being reflected in the VIX, which keeps dropping. So how are investors rethinking risk management in this environment?
Sure. Well, great to see you again, Greg. And I think you're absolutely right. That it's a very headline-driven market, and we see a lot of repositioning by clients trying to better understand the macro conditions that they're operating in today. We saw some volatility in April. We continue to see some volatility now with the geopolitical tensions. And I think at the end of the day, clients are rethinking their strategic asset allocation and in some cases taking a more defensive posture, which means reducing risk in parts of the portfolio.
The general expectation going forward is that the Fed is going to be cutting rates at some point. So for income-driven investors, what should they be doing right now in advance of that?
Yeah, great question. I think when we think about rates, it's really important to think about reinvestment risk. And many clients over the last several years have been reducing their duration profile, getting shorter duration in their fixed income portfolios. And I think it poses a really unique challenge as rates start to come down and you have to go back to the market to reinvest. You could be getting lower yields. So for income hungry investors, many of the things that we're seeing right now is thinking about diversifying those income sources. So not just traditional bonds. What are other ways to generate income?
Well, one other way is you could sell calls and you can generate it through options. Talk about how you can do that over at ProShares.
Sure. Well, a few years ago, we actually innovated in that space and we launched a daily covered call strategy, essentially using options that are 1 day to expiry to generate premiums and help clients achieve those income objectives. And one of the things that's unique about that strategy is it allows you to have a high income profile, but not necessarily give up participation in equity markets. Many of those strategies, as you know, Greg, are more bond-like in nature. So they provide the income, but they also cap the upside participation.
And I suppose if the Fed is going to be cutting rates, they see a potential slowdown in the economy. So if investors see this as well, what are some potential plays they can use through ProShares ETFs to manage their portfolios if they think things are going to soften going forward?
Sure. Yeah, look, I think there's really two things here. The Fed has a dual mandate. They always think about price stability and they also think about employment. The employment picture has actually been pretty resilient. So there hasn't been this rush to reduce rates. But to your point, the baseline expectations are rates will come down and we might get 1 to 2 cuts this year. And if that's related to a slowdown in the economy, thinking about downside protection, thinking about defensive equity strategies is going to be important. So one way of doing that is targeting higher quality companies that grow their dividends, for example. And ProShares has a suite of strategies that target dividend aristocrats, which tend to be defensive, right? They actually are high quality companies that have a history of raising their dividends over long periods of time.
And then finally, as we enter the second half of 2025, is there any off the beaten path strategies that you think may work in the second half of 2025? We've seen metals work so far in 2025. What's it going to be, maybe an outlier that could outperform the rest of the year?
Well, maybe this is a little bit of a, some of this is already played out in the market, but one area that we see a lot of clients interested in is thinking about their equity exposures and diversifying by region. So international stocks has been an area where we continue to see interest from clients. And I think that will continue because if you think about the last 10 plus years, it's really been about US exceptionalism, and that's reflected in equity prices in the US. I think it's a good time to think about that diversification.
All right. Well, thanks for coming on and talking about it.
Thank you very much.